Hello, everybody. Welcome to the Wall Street for Main Street podcast special. Today is March 9th, 2011, and my name is Mo Dawood. I'm the co-founder of Wall Street for Main Street, alongside with Jason Burak, and I have here with me is silver expert David Morgan. David, how are you doing today?
I'm doing quite well, thank you, Mo.
Good. David is the author of the silver book, The Skinny on Silver, and he also has a website, silver-investor.com. Um, well, let's get into it. You started to write about silver over a decade ago. I was just wondering, why did you decide to write about silver and not like real estate when it was booming 10 years ago?
Well, Mo, I have a background that's financial in nature. I was interested in money from a very early age, and so I started investigating, how money is made. How do you make money? And I was also very intrigued with the fact that you could actually make a living by investing. I thought, wow, that's really interesting. You can actually make your money work so hard that you could actually get to a point in time where you could have a lot of freedom by just having, picked very good investments. How do you do that? So I was fascinated by that whole idea. Well, it took me down a road I didn't really expect, because the idea of how is money created got me to understand how fractional reserve banking works and how the monetary system is structured and who controls it, and how monetary policy is different than fiscal policy, and what Keynesian economics means, and all the things that's very well known now on the internet, at least in our group and our group consciousness. And what I mean by that is not only the silver bugs and the gold bugs, it's much broader than that. I mean, that's why I did that, takeoff on the matrix, was the fact that there's so much power in money. I learned very early that money is power, and so there's power in that, and whoever controls it has a lot of power. So anyway, I looked at all those things. So, when I was like 18, 19 years old, I understood fractional reserve banking. I understood that it was a debt-based monetary system. I understood that honest money had been bypassed after, 1965 in the U.S., and really before that by law, really, off the gold standard in 1933, closed the gold window internationally, August 15th, 1971. So all this information. And that is, my background. I mean, all self-studied, all self-taught. I do have a degree in finance economics, that I had all this Austrian school, you might say, and my own thinking involved before I ever put my foot down into the master's program. So I never was really confrontational. I always felt that taking the higher ground and being professional and very much a gentleman got you a lot further down the road than being aggressive, although I can be. I'm aggressive in my thinking, but not in the way I display it. So, I went through the whole Keynesian economic system, you might say, from a economic perspective, challenging their premise the whole way, but doing it in a manner that made them think or rethink what they were teaching. So I think that was probably more than expected from my background, but that's it.
Well, thank you very much, David. Hi, this is Jason Burak. I think that's great. I watched your Silver Matrix video, and I think, it's a great analogy that you had there. I think people, now they've seen the political process for, in my opinion anyways, I think it's the political process is essentially broken. I think the two, large political parties, the Democrats and Republicans, it's not a lot of difference. They pretty much they all want to spend, taxpayer money. They all have their pet projects, all want to spend money. And I think, the only way that people, like the Matrix, opt out, the only way people, their voice matters anymore is by voting with their money, voting with their dollars, buying gold and silver, that they don't like the money system, the political system. I think that's the best way. Let me ask you one question here, and for me, I was wondering if you think that silver is definitely in phase 2 of the bull market, and is silver a lot more mainstream now? I know I've seen it mentioned a lot more recently, on Bloomberg and CNBC, or do you think we're not in phase 2 yet?
I definitely think we're in phase 2, and no one could put a precise date, time, or whatever on it. Actually, after the entire cycle, you can, pretty much, you can't pinpoint it to a day, but you can get pretty close. And okay, well, here's phase 1, there's phase 2, and there's the blow off. but that's after the fact. It's 2020 hindsight. But for my work, I would say roughly when we broke the $20 level, and that's very recent, as you know, I would say that's phase two. And I do it more not on a price point, but more on a psychological basis. Around the $20 level is when we got a big rush into the market and silver started being talked about much more than gold. People started buying silver much more than gold, and it's become much more popular than gold. I'd say, and I want to give Max Kaiser all due credit for this. Max is the one that came up with the, buy silver, crash JP Morgan. I agree, buy physical silver. It's the best thing you can do probably on an individual basis. But I don't think JP Morgan has any problem making digi dollars or digi liars from their computer system to cover whatever short they've got. But regardless, I think that we're going to see phase two carry on very much longer and very much higher. Having said that, I am a little cautious here. At the current level, we could see 40 probably. We might see a little more than that. I think we are going to get some kind of pullback correction, profit taking. I don't care what label you put on it. No market goes parabolic and stays there forever, but that will be just a shakeout. And hopefully everyone's just bought in the physical realm. Not too many people have over leveraged, and we'll all be able to hold what we have and buy on the next good sized dip, and away we go for a further ride in phase two. So I'm very much, as always, it doesn't mean that we won't get some kind of pullback, but I think so many people are waking up, and as you said, voting with their pocketbook. The one thing I like there's several things I like more about silver than gold, but one of them is that the banks really don't control silver anymore. They still have probably 50% of the gold in the paper matrix. They have control of gold still, and they certainly have a big paper matrix on silver. But the people own the silver, not the banking system. So the main thing is that that gives power to the people, not power to the bankers. And I really like that quality about silver, because in a fantasy land, and let me emphasize that, in an ideal world, this is my world, this isn't everyone's world by a long shot, but in an honest-based monetary system, if we could exclude the bankers and just do transactions face-to-face and use silver only, we've cut them out because they don't have much or any for practical purposes, and yet we do. Now, will that ever happen? No, I doubt it very much. But it could happen on an individual level. And I think it's more the idea, the philosophy, and as Max Kaiser's done, I mean, Max and I spoke recently, he says it's like making a political statement. And I agree with them. Somebody that goes and buys an ounce of silver probably isn't going to change their lives. But they might have a good feeling walking out of that coin shop with an ounce of silver, saying, I did something very passively. I didn't, hurt anyone. I didn't do anything other than I made a statement today. I came, I put my $35 of these green pieces of paper down on the counter, or euros or whatever they are. I walked out with a piece of shiny metal that's been money longer, used more places and more often by the common man than any other metal in the history of mankind, and it's real. I feel pretty good today. And I think that's kind of the message that Max has put out there.
Yeah. Funny how you talk about phase two of the silver market. The way I measure it is, all my friends make fun of me for investing in silver. I would consider silver in stage 3 once they jump on board and start buying silver. Probably be late in the game or probably never. So that's how I measured phase 2, phase 3, and phase 1. But anyway, I want to ask you about the gold to silver ratio. What's your outlook on that ratio? Do you think it get back to 1-to-1 or 1-to-16?
Yeah, that's a great question. And just for everybody that's listening to the podcast, I've put a great deal of my time and energy into the website. I've given away a lot from my head and my heart over the years, and I'm very happy to have done that and continue to do it. So if you go to the archive section of the website, the free part of the website, in fact, we have a search engine on there now. I addressed that quite some time ago, and I forget the name of the article, but you can probably type in gold silver ratio on my website, and it'll pop up a few articles that I've written and others have written. I said early on that I expect the ratio to get back to the 16-to-1, which is the monetary or classic ratio that I talk about. And also, I thought we could get back to about 10-to-1, which is more toward the natural ratio. The natural ratio is the amount of silver relative to the amount of gold that's in the Earth's crust. It was at 12-to-1 early in history, like in the 12th century. In the modern world, in the 21st century, it's about 8-1. That's the natural ratio. For every ounce of gold that's left in the planet, there's approximately 8 ounces of silver. I expect to see that ratio at the top of the market. But I want to go beyond that. That's what I believe. And no one knows. I mean, I don't know. You don't know. No one knows. The market knows. But I want to visit this par, this parity, that 1 ounce of gold is equal to 1 ounce of silver. My predecessor, which Jason and Mo, you may know and you may not. It's not important. It's somewhat important to me because of my background and my age. But Jerome Smith was pretty much the most well-known silver expert back in the last bull market. There were certainly others. Harry Brown was very favorable to silver, one of my mentors. There were others, James Sibbett, Howard Ruff. There were several guys that were pretty favorable to the silver market. But the king of the kings, the guy that really devoted most of his effort toward economics in silver, was Jerome Smith. Jerome felt that it could get to 5-1 as the ratio and possibly back to par, meaning that 1 ounce of gold is equal to 1 ounce of silver. The reason I want to focus on this for a little bit of time is that it's not as absurd as it sounds. And the reason it isn't is that through all of history, there's been about 40 billion ounces of silver that's come out of the Earth's surface. And there's been roughly 1/8 that amount, or 5 billion ounces of gold. Those are rough numbers. No one knows the exact. So 8-1, again, the natural ratio. But the amount of silver that's investable silver, first of all, about half of that silver is gone. So there's really about 20 billion ounces left. The rest of it's just gone forever. I can't say forever from a physicist's perspective, but from a practical perspective, it's gone. So of that, there's very little left. There's maybe 1 or 2 billion ounces at the most that's in investable form. And almost all of that silver today, as we're doing this interview, has already been bought in the physical realm. It's been bought for investment purposes. Almost every commercial bar out there that exists has been bought and held as investment purposes, and all the new product is being either bought for investment or given to industry. And the coin world is almost exclusively investors. So all of your junk bags, your silver eagles, silver maple leaves, Philharmonics, all your kookaburras, all the stuff that comes out of Perth Mint, which some of their kilo stuff is just very incredible stuff. I own a few of their kilo coins that are just very beautiful. But back on point, there is very little silver in investable form that's available. Very, very little. And since there's less silver than there is gold in that form, the ratio will continue to diminish. And where it will end up, nobody knows. But I just want to give the idea that if silver made it to $50 in 1980, and yes, that was a one-day event, so let's be clear, but nonetheless, it did do it. And there was 4 times more silver above ground at that time than there is today. And only 5% of the world's population was even involved, was even able to participate in the silver market in that time, meaning the U.S., which is about 4 or 5% of the world's population. And only 1% of that 5% participated in the market at that time, and it took it to $50. And yes, the hunts were involved. I understand that. But there was 4 times more silver. What's going to happen this time? When there's 25% of the amount of silver above ground than there was in 1980, it's a worldwide phenomena. The internet exists. You can buy silver literally with the click of a mouse. There's all kinds of programs out there now that are, monthly accumulation programs, which is really great for the little buy, $50 a week or $100 a month or that type of thing. I really have to say, with my work from a year ago, looking out over the next decade for the silver market, which members that pay us to subscribe will get for free. Well, I won't say they get it for free. They'll get it with part of their membership. Looks what's going to take place in the silver market over the next decade. Mo and Jason, I am more bullish over the next 10 years than I was in the first 10 years.
That is an incredible statement, David. That is absolutely incredible. Yeah, there's more awareness. I think Wall Street's definitely all over this story now. Like, I really thought I was ahead of Wall Street, reading you. I didn't see silver stories up until, the last few months. And now, I see it mentioned all the time on mainstream financial media. But talking about silver, and you think it's going to do so well, let's talk about Silver Wheaton. Silver Wheaton had great earnings last week. Do you think that it's a leverage play. Do you think that Silver Wheaton, like their business model, do you think that's like the safer way to play it than conventional mining stocks? Do you think like the gold and silver royalties, like Franco-Nevada and Royal Gold and some of the other smaller ones, do you think that those business models are probably like safer to put in your portfolio than, learning about the mining business first?
Yeah, and I'm going to answer your question, and you have to forgive me a bit because, as you guys know, and many people probably listening to this podcast for the first time don't know me, I have an engineering background first, and then went on to finance. But the model that I use is different than most, newsletter writers. I really don't like the name newsletter writer, but I don't really care. I think I'm deeper than just a writer. But regardless, the matrix, I shouldn't use the word matrix, the methodology that I use is the market knows more than anybody. And so I let the market determine a lot of things for me. And I let the market determine the best companies for me. Now, I can also analyze them because I certainly know how to do stock analysis. But what floated to the top quite some time ago on the silver side was Silver Wheaton for a variety of reasons. Franco-Nevada is near the top at most of the time. Royal Gold has been there several times. But what I do in the report is every month, I let the market tell me through my methodology, which I will not give to anyone, how the best of the best are doing. Because people make a grave error in investing. And I'm going to digress here, but I want to make a really strong point because I don't like to see people get hurt. I like to see people get enthused about silver, but buying at the wrong time or buying the wrong thing can sting. Nothing's more challenging than knowing a sector like the silver market's going up and buying the wrong silver stock and seeing all your friends jumping for joy and you're sitting there with this dog and it's not doing anything. So my methodology is that most people, when they buy a house, buy the best house they can afford, or when they buy a car, they buy the best car they can afford. They buy the best. But in the stock market, the psychology is opposite. People buy the cheapest piece of garbage they can find. And that's an amateur's attitude. If you had one share of the best company in the world, I would suggest that that's a far better investment than buying thousands of shares of some penny stock that are going nowhere. I'm not against penny stocks per se, but what I'm stating very emphatically is that the way I run our business is that big money goes into big companies. Silver Wheaton has been at the top of that list for quite some time. And yes, their business model is superior to almost anything out there on the stock side. I do have some concerns about Silver Wheaton. They're pretty minor, but they're so well diversified that even my concerns can be overcome by proper diversification, which they've done. So yes, it hits the top quite often. In fact, to be very gut level honest, Silver Standard was certainly one of our tops for a long time using my methodology. It dropped off the top. It's still a long-term hold as far as I'm concerned. But nonetheless, Silver Wheaton displaced it quite some time ago. So these fund managers that follow our work, if they had just done the month that I said, drop, that all I said was that Silver Wheaton is doing better than Silver Standard as of now. And just, flip the money from one to the other, which you can or can't do. I mean, I can't tell people what to do. I can just suggest what our deep analysis is showing. You would be so happy right now because one has basically been flat for quite some time, and the other one, as you well know, continues to make new highs.
Yes, that's a good point. What do you consider is more important when looking at a mining stock? Is it the cash cost, or is it the how high the grade the metal they are pulling out of the ground?
Well, Mo, I've been in this thing for a very long time, and I won't name names because I have respect for almost everybody in the industry.
Right.
There is a gentleman that I consider to be the best numbers guy in the business. And I discovered him quite some time ago. And when I subscribed to his work, I kind of thought I'd found the Rosetta Stone, because having a financial background and being a numbers guy, who wouldn't think that by buying, more silver per dollar invested in one company isn't superior to another one? I mean, that's perfectly logical. And I'm a very logical thinker having an engineering background. But what I discovered fairly quickly was that is true. But truth doesn't make you rich. What makes you rich is understanding more psychology than anything else, because people buy an emotion. I mean, people buy a cheap stock because it doesn't cost much. People don't buy the best house. They buy the best house and the best car, but they buy the cheap stock or whatever. So I would say, generally speaking, yeah, you want to get the most silver per dollar invested. That's true, generally speaking. What you really want to know is who's the management, what stocks are moving. I'm not just a momentum player, but that does work into our methodology, and what the growth rate is. What's the growth rate? What's the PEG ratio, which you can look up on the internet what that means, but it's your price to earnings over the growth rate. There's lots of factors. So I look at, decent companies that have decent earnings that can grow. My favorite model is a mid-tier company that can be bought out. It's undervalued. It's not that hard to find, but they're not easy either. And we changed the methodology a little bit this year. Basically, the methodology actually stayed the same, but I renamed it because the way people made so much money with my work is if they followed the rules and did what I taught and didn't just load up on the speculation, but put big money in big companies like I teach and small amounts of money in small companies like I teach. I mean, after a decade, I've had people come up to me at all these shows I frequent and say I'm a millionaire now, or double, I'm in the millions now, and that type of thing. I'm not saying everyone becomes a millionaire. What I'm saying is I don't solicit these comments. They come up to me and say, I can't believe how good I'm doing. Thank you so much. And some of these people never subscribe. Some have. But regardless, you have to understand a lot more than, how many ounces you're buying, or is it a rich mine or not. But generally, grade is king, generally speaking. So you're a lot better off with a high-grade mine than you are with a low-grade mine. Not to dissuade the fact that there aren't open pit situations that are profitable, but there are hardly any open pit silver mines that are profitable. So that's something to keep in mind. Not saying there couldn't be. So there's much more to it, and I can't give you the analysis because some of it's psychological, it's sentiment readings, it's other things that I don't divulge totally, and it's experience. When I thought you could find out just by crunching the numbers, you're going to get rich, and I learned the hard way that you don't. I had to reevaluate everything. I had to check my premises, and I had to go back to square one and discover what did work. Not that I have all the answers. I'm not saying that. What I am saying is you diversify properly and allocate your capital in a methodology that makes sense. There's no way you can say that silver Wheaton is equal to some XYZ startup mining company that's exploring for silver. They're just not. It's like comparing the greatest racehorse in the world to some kind of nag that just was born in the backyard that you think might become a racehorse. And yet some people's approach is that those are the same. Well, that's not true. It just isn't. And I know that. And the way I know it is by making money. That's how I know it. Check somebody's bank account if you want to know where they're at. And I'm not saying I'm that rich. All I'm saying is that percentage-wise, the gains that have been made have been done by focusing on where the money is. You put your money on the horses that are favored, and you can speculate on the ones that are long shots. It's that simple in a way.
Okay, I think you answered that question just great, David. You gave like a full in-depth answer there, that people should concentrate the majority of their money, on the safer plays, the ones with the cash flow that are in production, and then maybe sprinkle in the other stuff if, they understand the mining business and want to take some further risks. My next question is going to be macro related. So, we have the potential of QE3, after QE2 here. I don't know if there's going to be, a pause in between after QE2 ends. There's also, other inflation, deflation pressures. I think there's good arguments for both. We have sovereign state default. You have PIGS. In Europe, you have sovereign credit default there, and then you have U.S. states here, with growing financial problems. California is on the brink, Florida, New York, New Jersey. Where do you see inflation or deflation? Like, I'm an Austrian school economics guy like you. Where do you see inflation or deflation, and how do you see gold and silver doing in either, or do you see them doing pretty well in both?
A great question, and probably one of the most important questions that can be asked. I know from my study of past history and monetary that all debt-based monetary systems end in default. They always end in default. So the question becomes kind of a thought experiment. One way to default is a straight default. You owe me $5,000. You cannot pay me the $5,000. You've defaulted on the loan. And then there's a little subset to that. You owe me $5,000, and I know that I can never get the $5,000 back from you, but you're willing to say, David, I'll give you the best I've got. It's $1,000. Take it or leave it. It's going to cancel out this loan, and that's a partial default. And I say, sure, I'll take the 1,000. Let's part friends and goodbye. That kind of thing. So it's a default or straight default. On the other hand, you can default in another way. Another way you can default is that you print money that becomes worth less and worth less and worth less until it's worthless. And that's a default. So either case, you default. Now, morally, you're much better off from a straight default. You say, David, I can't pay you back. You're honest, you're upright, you're straight up, and you default. And at least we know where each other stands. And if you have a default in the financial system, what happens is that all the bad debt gets wiped out, and the other side isn't very happy because they're getting back pennies on the dollar or nothing. But the capital markets are structured such that in an advanced capital system like we have, the bond market will reap the benefit of that truth, meaning that interest rates will soar and the bond market will crash. And the bonds will reflect the true natural nature of what the true wealth available to the market is. And I'm sorry, but that's the way advanced capital markets work when they're allowed to be free, but they're not free. And therefore, I think, unfortunately, that the moral structure of where you have a debt liquidating depression and defaults are rampant and we're able to rebuild from that will not take place. I do believe that we're going to see what I call a currency crisis, which does not mean a hyperinflation. Remember, money becomes worthless, and worth less, and then it's worthless. It doesn't have to go the route of Zimbabwe. In fact, I don't think it ever will in the United States. It's a psychological phenomenon that takes place throughout the entire global system that only a very minuscule amount of people start, and it is not pervasive. It's not understood, and it accelerates rapidly. It's where that one little butterfly's wing starts the phenomena that creates something that most people don't have a clue of what's going on. There's three kinds of people in this world. There's kind of people that make things happen. There's the kinds of people that watch things happen. And the vast majority say, what happened? And that's the way the world works. So what's going to happen, in my view, is that somebody somewhere at some time is going to flap that butterfly's wing, and they're going to say, I don't want this, I want silver. I don't want this, I want out of the bond market. And that flap of that wing is going to catch. And that's going to be a very small start. It's going to accelerate rapidly. And what that means is that the U.S. dollar is shunned by a small amount of people, and that catches rapidly. And basically, the day of the dollar supremacy is over. And it doesn't take a hyperinflation. It doesn't take $200 oil. All it takes is a psychological shift that goes rapidly through the entire system, and that's all it's going to take. Is it going to happen? I don't know. Could it happen? Absolutely. Are we getting close to it? Yes, we are. Will it happen in 2011? No, I don't think so. But I don't think that this system, as corrupt as it's become, and as full of lies as it is, can go another 10 years. I would be very, very surprised to see some event like I just outlined not take place within the next 2 years.
That's a very interesting point. I think the founding fathers of the Constitution warned people about central banking, which could lead to the very problem we're having today, which is corruption and greed and dictatorship. We are at the hand of the Federal Reserve. The face of the economy is in the hand of the Federal Reserve. Mr. Morgan, thank you for coming on to our Wall Street from Main Street podcast. I hope you come back again. We are certainly happy that you set some time aside and came to talk to us.
Well, my pleasure. Hopefully I was beneficial to your listeners. It's been one of my main missions in life to teach and empower people to understand the benefits of an honest financial system. Gold and silver are not even in my mission statement. Certainly they're integral to it. But if we could all play fair, tell the truth, look each other in the eye, deal like, a straight up manner like this country was founded upon, on principles that were guaranteed to provide liberty and prosperity and freedom for all, we would have a far, far better world than we see today. And I'm not that negative. It's certainly gone the wrong direction, but I'm a big believer in the human spirit, and I do believe that we're going to get it back.
Oh yeah, I definitely agree. I'm optimistic. I hope for better things as well. And I hope the people would wake up and realize that these people on Capitol Hill and on Wall Street as well are doing stuff that are affecting your everyday life. But that's all we have for tonight. Until then, I wish everybody a good night, and we will be back on again soon. Thank you.